Bitcoin and other cryptocurrencies have been taking over the news headlines lately. But what do you really need to know about these investments? Keep on watching and I'll tell you. I'm Jeff Jr. with Trajan Wealth, and today I'll be covering the recent Bitcoin boom, Dogecoin, and why you shouldn't fear that you're missing out. So first, what is cryptocurrency? Cryptocurrency is digital money that exists entirely online. These are not issued by a central bank or a government, unlike our dollar currencies. People use cryptocurrency for various reasons. Some like to use them to purchase goods online. In contrast, others use them as investments like the stock market. Now, if you want more details on how Bitcoin and other cryptocurrencies work, we've done a video on it, and it'll be linked down below. Now, if you've been keeping up with the news, you know that Bitcoin talk has exploded lately. CNBC has even placed the pricing movement on the main screen like they do the Dow and the S&P indices. And there are a few reasons for this. First is the increased support from large corporations for digital currency. In late 2020, MicroStrategy and Square invested millions into the cryptocurrency. Bitcoin prices rocketed in late October when PayPal announced that it was adding Bitcoin buying to its wallet. But the recent $1.5 billion investment by Tesla into Bitcoin caused the price to rise 16% and growing, hitting their $1 trillion mark cap on February 19th. Bitcoin is also seen as digital gold for the millennial generation. Supporters argue that Bitcoin is a hedge against inflation. Plus, the support from companies and big celebrity names has led to the increased legitimacy for the cryptocurrency. Just look at Dogecoin, the cryptocurrency that was started as a joke. Yes, it was started as a joke back in 2013. On February 9th, Musk and even rapper Snoop Dogg tweeted about Dogecoin, and the price jumped as much as 31%. This makes it clear the extreme power that big names have over these cryptocurrencies and really who's buying them. Are you experiencing investment FOMO? That's the fear of missing out. It's hard not to. Investors are speculating if Bitcoin's value is going to hit $100,000 per Bitcoin by year end, which has doubled from now. You may be looking into the future, already imagining the regrets you might have had, but be careful. This mass FOMO is also leading to large amounts of greed. As Warren Buffett once said, be greedy when others are fearful, and fearful when others are greedy. It is tempting, but there are downsides to this currency. Though Bitcoin has grown from its launch in 2009, there is still a lack of knowledge about where this is really going to go. Will we be using Bitcoin as a standard form of payment someday? Elon Musk has announced his plans to allow customers to purchase from Tesla using Bitcoin, indicating this future is a possibility. But Bitcoin still isn't accepted as a form of payment in most stores you'd typically go to. Just think of the grocery store or even the gas station. This makes it not so useful as a currency, and that Bitcoin is hardly linked to our economy. This hype around Bitcoin triggers inexperienced investors to put their money into an incredibly high-priced asset with little to no idea of its true worth to come. Not to mention, governments have not completely weighed in on this subject yet. Now, while I agree with the general premise of a digital currency, I still consider this asset class very speculative. Now, can it hurt to buy some if you're a believer? Absolutely not. Just don't buy it because you're trying to keep up with the Joneses and get rich quick. At Trajan Wealth, we encourage you to view our investments or your investments from a long-term perspective. Stick with your investment strategy and don't fall into the abyss of the news headlines. If you think you want to invest into cryptocurrency, come talk to a Trajan Wealth fiduciary advisor. We'll look ahead at your long-term goals and help you decide if cryptocurrency fits into your retirement plan. So until next time, take care.